Hey everybody, it's Wayne. Thanks so much for tuning in for another weekly portfolio update. If you're new to the channel, thank you in advance for following along as I document my investment journey. A few years ago, I retired from law enforcement, and even though I was able to cross that retirement finish line, collecting my nearly $104,000 a year pension, I soon realized that did not equate to easy street. It's not that I couldn't survive on that very generous amount, but I really want to focus on building out generational wealth, something that I can pass along to my kids who are relatively young. So I've gone back to work full time. I'm taking advantage of investing not only in the stock market but also contributing to my employer's 457 as well as 403. I've also begun to focus on investing in both my wife and I's Roth account. So these weekly updates are going to give you a sort of a hodgepodge of all of my active investments. Let's go ahead and kick things off with Robinhood. Now I have two primary brokerages that I'm going to give you some real-time updates on. Robinhood I primarily keep to sell my options. So nearly all of the positions within my Robinhood, I own 100 plus shares that I will sell covered calls. I also have a cash amount in that brokerage account that I use as collateral when selling cash secured puts. If we look here for the week, Robinhood, my portfolio traded relatively flat. I'm up about 0.30%. Now, year to date, I've had an incredible run up. I'm up about 54,000. That's about 16.22%. But all time, I am technically still down 3.61% or about 14,000. Now take a look here at this balance of 389,000. As I mentioned earlier, that's not all going to be stocks and options. In fact, stocks and options only makes up 346,000, and I have about 42,000 in cash. Now this cash amount is always going to fluctuate week to week because again, I am selling covered calls, and in this case, I recently had IWM called away from me. So 100 shares I owned, they were called away from me, which means, right, I was paid out the cash value of that contract. So it wouldn't surprise me by next week this drops down to 20,000 or maybe goes up a few thousand as well. Let's go ahead and show you within Robinhood my top 5 winners and losers. On the winner side, Microsoft had an incredible earnings this past week, and so I'm up about $12,000 on my 201 shares. Apple also had earnings released last week, and so I'm up about 7,500. Starbucks, Celsius, and Costco round out that top 5. Let's go ahead and give you the 5 losers, and no surprise, Tesla continues to be a dog in my portfolio. I am down 32,000 on my 300 shares. Amazon, Traeger, CVS, and Target, I am also down. Truth be told, out of these 5, the only one that really is a pebble in my shoe is Traeger. Yeah, I am down big time on Traeger. I really have no optimism when it comes to my current average cost of $14.38 per share, and I own 319 shares. Currently, the cost of Traeger is $2.89. It is definitely near its 52-week low. I think I need to make a decision, and that decision is not going to involve selling for a loss. There's really no need for me to do that. But I think I need to make a decision as to whether or not I want to buy additional hundreds of shares to average down. If I were to buy, let's say, 300 more shares at $2.89 per, that would, of course, bring my average cost below, hopefully, $10 per share. And maybe I can kind of crawl out of this pit by selling a series of covered calls. So you guys will have to remain tuned in when it comes to my Traeger position. Let's go ahead and switch over to M1. M1 is a relatively newer portfolio. I opened up my M1 in August of 2022, and I really like the set it and forget it approach to M1. In my portfolio, I currently have $123,000 worth of stock. You can see here for the week, I'm down just under 1%. Now within my M1, I've got 4 primary slices: quarterly dividends, which is comprised of several other stocks. I've got my monthly dividend payers. These are only stocks that pay me monthly dividends. My long-term hold slice we're going to go ahead and come back to this because this has received the majority of my attention this past year. And then I have my ETF slice, which has a basket full of my favorite ETFs. Take a look at the target percentage versus the actual percentage. And right now, my long-term hold slice is set to 80%. In reality, the other three slices are so overweight all of my money that I contribute on a weekly basis, which is $500. That's Monday through Friday, $100 every single day. So that $500 on a weekly basis is all going to my long-term hold slice. Within my long-term hold slice, which is valued at $28,000, I have what I would categorize as 15 quality stocks. These are stocks that I want to focus on in 2023. Not quantity, but quality. So I've got Coca-Cola, Pepsi, AVGO, Johnson & Johnson, Visa, Southern Company, Lowe's, ExxonMobil, McDonald's, Procter & Gamble, AbbVie, Union Pacific, Texas Roadhouse, and look at this. If you guys have been following along for the last couple of weeks, you know Waste Management is definitely a newer addition. Yes, up until last month, I only had a total of 14 positions in the long-term hold slice. I recently added Waste Management. I think Waste Management is a fantastic stock. I had no other stocks in my portfolio from the industrial sector. So after doing some research, looking at the dividend rate, looking at the chart, I'm excited to say that Waste Management is going to be in my long-term hold slice for the foreseeable future. And as I mentioned, on a weekly basis, I am contributing $500. And so since I recently added this just 2 weeks ago, the balance was zero. Nearly all of my purchases in the past 2 weeks has gone up to bringing up Waste Management to this target percentage of 6%. I'm also excited to share, as you guys know, I'm really big about talking about small goals, big victories. And Coca-Cola and Pepsi, all of these stocks are over the $1,000 threshold. So some newer additions to that coveted $1,000 threshold is AVGO, Johnson & Johnson, and Visa is almost there as well. So that's one of the things that I love about M1. Every week, it looks at, the stocks that are in my long-term hold slice. It looks at the value. It looks at the target percentage. It looks at the actual percentage. And so it does all the heavy work, all the calculations. So a lot of these stocks here, with the exception of the recent addition of Waste Management, they're within $30 to $40 of each other. So that's a nice thing. Over this past year, all 15 of these stocks have slowly been increasing, and they are relatively the same in value. So you'll have to stay tuned. I'd love for all 15 of these stocks to maybe go up to the double digit, right? Not the 4-digit, but the actual 5-digit mark, like you see here with O Realty. But there is an update on M1. Hey, before I actually switch over to dividends, let's go ahead and take a look at the total number of holdings in M1, and I currently have 46 positions. I have an unrealized loss of 3.67%. I am down in total. I don't pay too much attention to this number because, again, my focus is just those 15 stocks, and so it's unfortunate the remaining positions are not receiving any funding whatsoever. But hopefully by the end of the year, I'll have a more sizable percentage in my long-term size, which means money that I continue to allocate on a weekly basis will also carry over to the other slices like quarterly dividends, monthly dividends, and my ETF as well. So let's give you a quick update on all the dividends that I have received so far, starting things off in M1. Nothing too crazy to report. The first week of May, I received 2 dividend payments from JEPQ and JEPI. As you guys know, I love my monthly dividend payers. If we scroll over here to my spreadsheet, I currently own a total of, 11 monthly dividend payers. I've got about $65,000 in total invested, and that's generated me about $373 on a monthly basis. And as you guys can see right here, JEPQ and JEPI, I own 101 shares of each. So they are bringing me in, on average, where's my monthly payer on this? Oh, about what, $93 a month, which is pretty consistent with what you're seeing here. It's also important to note, though, that JEPQ and JEPI do pay a variable dividend. So what I was paid last month, it will not be the same amount that I receive this month. Let's go ahead and scroll over to Robinhood. And with Robinhood, not too much activity to report in May. The only dividend that I received so far was from CVS for $61.09. It's important to note for the new subscribers, I do not drip my dividends, meaning when I receive that dividend payment from that company, I do not reinvest in that company, with the exception of a few stocks here on the Robinhood side. My goal this year is to get up to 100 shares of Costco, UPS, and now Aflac. So those dividends that I receive from those three companies, yes, they will be reinvested in the actual company. But any other dividend that I receive, like you see here from CVS, this $61 essentially goes into my brokerage account, and I use that either to sell cash secured puts or to buy other stocks. The same thing goes for M1. All of the dividends that I receive, they are not being reinvested in the actual stock that pays it, but rather, every time I make my daily buys, it's going to be included with that $100 that I deposit every single day. So let's go ahead and talk about the premium that I have earned in the past 2 weeks. Again, my apologies, I wasn't able to push out a portfolio update last week. This is a still capture of what my options premium spreadsheet looked 2 weeks ago. And as you can see here in a minute, I've made some cosmetic changes. One thing I want to point out, take a look here at my combined total. Now, this was 2 weeks ago. My combined total for covered calls and cash secured puts was $12,952. Well, if you look at the amount today, that's gone down slightly. And one of the reasons it's done that is a few weeks ago, Tesla had earnings and their share price dropped significantly. I made a decision to buy to close a covered call that I had expiring in January of 2024. Doing so takes me off of the sidelines with selling calls against those 100 shares of Tesla, but it cost me $1,800. And so April did not finish out as strong as I wanted it to. And in fact, January, actually, if we compare here to this screenshot, look at January, I was down 21,000. If we look at the updated spreadsheet, I'm down 23,000. Remember, when you roll out a covered call, that loss on my spreadsheet will occur or will be reflected as to when the contract was originally written. So one of the things that I want to point out when I show the options premium breakdown per year, I don't necessarily say, yeah, I made $13,000 in the month of April, or I made $13,000 in the month of February, because in reality, you have to zoom out. You have to look at the total premium that you've earned with losses as well as gains. And so January, because I've had to roll out several of my contracts, technically in the month of January, I incurred a $23,000 loss. But in total, if we add up all of the months selling covered calls, these 284 contracts, I have made $9,111. Now, I will break down covered calls differently from cash secured puts. So on the CSP side, I have sold a total of 61 contracts, and that equates to $3,726. So between covered calls, cash secured puts, I've made $12,837. If we look at what I'm making on a monthly basis, that's going to equate to about $2,500. Listen, if I can make $2,500 every month out of the year, I will be a very happy person. And last but not least, I want to point out that I am running the wheel strategy on these three stocks: Celsius, Amazon, and SoFi. So technically, even though these are covered calls as well as cash secured puts, I am keeping track of the progress on these stocks on different spreadsheets. Hence that you see these figures are added at the very bottom. So in total, year to date, and today's date's May 7th, as far as me recording this video, I have made $14,967. So I'm technically down about $100 during the past 2 weeks, but I feel very confident going forward, so long as I don't have to buy to close another expensive contract like I did 2 weeks ago. So there you have it, a rundown of both portfolios. You got the dividend rundown, and as you guys know, I love selling covered calls and cash secured puts. And as always, thanks so much for tuning in. You'll have to leave me a comment of the 3 topics that I talk about: dividends, portfolio updates, as well as options. Let me know what you prefer to see or what you're most interested in. Don't worry, you won't hurt my feelings if you say none of the above. But nonetheless, thank you guys for continuing to tune in and support me as I track my financial journey. We'll see you on the next one.